Hey everybody, I hope you're doing well. I just want to welcome you to the first of these little mini topics in a series that I am calling the No Nonsense Forex Building Blocks. They're just basically short snippets of information that I've gleaned from the No Nonsense Forex methodology. First of all, I'd just like to say that I take no credit for the NNFX methodology. I am only here attempting to explain the system as I understand it. And this is a system that was developed by VP, that's what he goes by, on NoNonsenseForex.com. Second thing I want to say is if you have not consumed all of that content on his website, you really need to do so. These short snippets are really no substitute for studying and learning the methodology correctly from the expert, VP. I am no expert in No Nonsense Forex. I am simply a fellow student just trying to make my way to becoming a successful trader. Speaking of the No Nonsense Forex methodology, this is the website that VP has set up, and he is really the father of this whole methodology, so to speak. He has tons of information, and this is the best place to go and learn about it. He has videos, he has blogs, he has podcasts, and just all kinds of information. So this is where you really need to go to get that no nonsense Forex foundation. Because that's where I learned, and that's where everyone is going to get the best information straight from the expert. Basically, a VP says that we should be building an algorithmic trend following system. And what we want to do is we want to optimize the way that we use technical analysis. So rather than being discretionary traders and trying to pick out chart patterns and candle patterns and trends and support and resistance, we need to find a way just to optimize technical indicators to give us that edge or that advantage over the market. You probably will think about the algorithm first when you think of no nonsense Forex. And the algorithm is one that VP has described to us, having six different indicators combined in a way to really give that algorithm that edge over the market. And the six parts are: number one is the ATR, that's a specific indicator that's used for risk management. We have a C1, which is a confirmation indicator, and that is our main signal of a trend direction. We have a C2, which is a secondary confirmation of the trend. We have a volume indicator, and its purpose is simply to tell us the strength of the trend. Is it strong enough for us to jump into? We have a baseline, and that gives us the overall trend. For example, we only want to take long positions if price is above the trend, and we only want to take short positions if price is below that trend or that baseline. And finally, we have an exit indicator that will help to display when that trend may be changing and discontinuing. So this is what a lot of people spend their time on. They spend hours and hours trying to put together this algorithm and make it as profitable as they can. But this is only one piece. When we talk about, no nonsense Forex methodology, it is so much more than just putting these 6 indicators together. The bigger tree that's holding this system is our money management. And VP talks a lot about money management. How do you enter your trades? What type of lots do you use so that you don't blow an account? You don't blow up an account, and you're not limiting yourself at the same time. Some people like to do a fixed lot amount with fixed take profit and fixed stop loss for each and every trade, irregardless of the pair, of what's happening in the market. And that may work well for some people, and I'm not knocking that, but VP's money management philosophy, if you will, is much more dynamic, that you utilize ebbs and flows of the market. And so you are actually entering into your trades in a dynamic means to have the greatest advantage of that money management. I'm going to be doing a whole nother little topic on money management, but I just wanted to point out at this point that money management is so important when you're talking about the entire philosophy. And even more so than that is your trading psychology that goes along with this. Underneath that tree is a root system of trading psychology, and that has to be solid. That has to be set for you to be successful as well. Trading psychology is everything from having a positive mindset to being disciplined, following your system, not panicking, not having that fear of missing out. There's just so many things that if your trading psychology is not solid, you're never going to grow that tree, and it's never going to hold your algorithm, so to speak. So that's really what you want to look at. VP talks about 3 main aspects of Forex. He talks about the money management, the trading psychology, and trade entries. So if we look at this in this perspective, you can see that it's really this whole package that makes up the NNFX methodology. I like to think of it like this. In order to be successful or to have success, you need 3 sides to the triangle. You have to control risk, you have to be consistent, and you have to follow a strategy. So when we say control risk, we're talking about following those money management rules and really watching your risk to reward. And you have to do this each and every time because you want to be successful. You don't want to blow up your account. You need to be consistent. This has to do with having the discipline, having patience, and a positive mindset. Okay, the market is not always going to go in your favor, and you can't be discouraged and you can't panic. You need to have that kind of robot mentality to follow the system. And finally, it comes to that algorithm that we talked about, but you want to make sure that you have confidence in that algorithm so that you can be consistent and not deviate from that. And that comes with having a very solid tested trade plan, something where you have specific go or no go rules set up. So once you have all of these things in place, then you will start to find that success, and you'll start to see more profitable trades and see that edge over the market. Just as a reminder, we're in this together. And this is just the first building block I know I combined a couple of topics. The next topic, though, I think I'm going to focus on is going to be that money management and ATR. How do those work together to make sure that you're setting yourself up for success?